Today, let's look at the market performance and SPX price action for Tuesday, April 23rd, 2025, along with price targets and key points of resistance. We'll also review improving bullish percent charts and the earnings calendar for my holdings and earnings releases so far. We'll highlight some of the major economic data releases this week, and we'll close out with a look at the pre-market activity. Yesterday, the Dow closed up 1.07%. S&P 500 closed up 1.67%, and the Nasdaq closed up 2.50%. The VIX crossed below the 30 line to end up at 28.45. If we look at the sector action, we can see that 9 of the 11 sectors closed in the green, while energy and consumer staples closed in the red. The leaderboard was led by technology, consumer discretionary, and communication services, all aggressive sectors. The XPX closed at 5375.86 on Tuesday, April 22nd. The 20-day, 50-day, and 200-day SMAs are all declining, and the 50-day crossed below the 200-day on April the 14th. The 20-day SMA crossed below the October 27, 2023 anchored volume weighted average price line. All the indicated anchored VWAP lines are decreasing with the exception of October 13th, 2022, which is still increasing. A key point of resistance that I'm watching is the January 4th, 2024 anchored VWAP line, which aligns closely with the March 13th close. Breaking through that price to the upside and holding would be significant. We do have a wedge forming that we will need to resolve. And if we add the price volume by price bars, we can see that there's some pretty significant resistance above where we're trading at this point that we'll need to break through. So there's a lot of volume that was purchased at these particular levels. So somewhere between 5,500 and 5,600, nearing 5,700, there will be quite a bit of resistance where some stranded longs will be looking to exit their trades at that level, providing additional resistance if we do move back to that range. Given the volatility we've seen in the month of April, I would not be surprised to see a retest of the level we saw at the close of April 8th before moving higher. The market may consolidate around current pricing for some time as the market wrestles with the impact of tariffs and company earnings over the current quarter. The MACD is negative, but the 12-day moving average is above the 26-day moving average, and the RSI improved slightly yesterday to 47.44. If we look at the VIX, we can see that it decreased 6.93% yesterday, closing at 28.45, which is the lowest level we've seen since April the 3rd, the first day following the tariff announcements. I am watching for a steady decrease in volatility back to the level of 20. I want to look at some bullish percent charts to give us some idea of how the underlying equities within the SPX are improving in their bullish percent index. I want to start off with a market trend of the SPX. This uses exponential moving averages to determine in the long term the trend. You can see that we just crossed below zero. You can see in 2022 through 2023 2023, early part of 2023, we spent all of that time in underperformance. And we're looking to get into that position at this point again. If we look at the midterm, we can see that it's kind of peaked down here, and we're starting to get some improvement. And in the short term, over the next few weeks, we also saw the spike down and an improvement in short-term outlook. If we look at this for the NDX, the NASDAQ, we can see a very similar pattern. Then when we move to the bullish percent index for the New York Stock Exchange, which is a broad measure of equities, we can see that we're sitting about 46%, so we haven't crossed above the 50 line. And we were at one point below the 25 line, all the way down to 18% of the equities in this particular index were not very bullish at all. If we look at the NASDAQ composite, it's sitting at about 37. We did spike down to under 22% at one point. For the NASDAQ 100, we were down to as low as almost 5%, but now we're sitting closer to 57 or so. For the S&P 100, we were down to under 10, and we're now approaching 60. For the S&P 500, we were down below 15, a little bit above 10, and now we're above 60 at the moment. And for the Dow Jones Industrial, we were down to about 10% of the components were in bearish configuration, and now we're slightly above 50, approaching 55. If we look at these same charts for the various sectors within the S&P 500, we can see technology has improved to almost 70% bullish. The consumer discretionary is sitting at about 57.5 at the moment, after being as low as nearly 7.5%. The communication services sector is not performing quite as well. We got down to about 15% that were in a bearish configuration, and we're currently sitting near 35. If we look at the financial sector, we were down close to 10 at one point, and now we're approaching the 70%. For the industrials, we were down around 5% at one point, and now we're sitting closer to 60. For the healthcare sector, we were down to just slightly above 15, and now we're sitting closer to 52.5. For consumer staples, we didn't ever get below the 25% mark, but we're sitting right at 50, or close to 50, 47 or so. Then if we look at the real estate sector, we were down to under 15, and now we're sitting closer to 67.75. The utility sector, we did not cross below the 25 line. We got down to about 30, and we're currently sitting at 57.5. Then for the energy sector, we got down as low as, looks like it was almost zero. Probably not quite, but we're now sitting at 63.6. And then finally, the materials sector, we were down to 3.5% at one point, and now we're sitting at 60%. Turning our attention to the economic data releases this week, The MBA mortgage applications for April the 18th were released. They were down 12.7% this week compared to the prior week of minus 8.5%. March new home sales were reported. There were 724K reported. 680K were expected, and the prior was 676K. The March building permits was 1.467 million compared to the 1.482 million expected and the 1.459 million prior. This morning, jobless claims were reported. Initial jobless claims came in at 222K, which also matched expectations. The prior was 216K, and that was revised up from 215K. Continued jobless claims was 1.841 million, with 1.88 million estimated, and 1.878 million prior, which was revised down from 1.885 million. Later today, we have existing home sales will be reported, and tomorrow the Michigan Consumer Sentiment will be released. For the earnings calendar this week for my holdings, the remaining two companies that I have reporting are AbbVie and Centene, which both report before the market open tomorrow. If we look at the earnings releases so far, I've had 4 of my holdings report, and AbbVie and Centene report tomorrow. AbbVie is expected to report $12.91 billion in revenue and $2.44 in earnings. And Centene is expected to report $43.25 billion with $2.52 in earnings. Looking at the chart from AbbVie, we can see that it's in negative PPO territory, and the RSI line is sitting at 39.41, so it is showing some relative weakness moving into the earnings. If we look at Centene, they're in positive PPO territory with an RSI of 53.91, so they're showing some relative strength going into earnings. Then if we look at those that have already reported, ADC had a drop following their earnings of 2.40%. RTX took a big hit immediately following the earnings. They were down over 9%, but they did recover 6.53% of that today. Then if we look at T that reported, they were slightly up by 0.85%. Tesla reported 2 days ago, and they did have an improvement of 5.37% yesterday. We'll close out this video by looking at the futures market before the market opens in about 15 minutes. The Dow futures are down 77.2%. S&P futures are up 3.05%. And the NASDAQ futures are up 46.23, about 0.25%. I wish you a great trading day as we navigate this market uncertainty. We'll talk to you again later. Have a great day. Thank you.